Metals, including copper and nickel, dipped today after seeing record highs this week. Another rally comes as demand is surging amid fears of U.S. levies on metals. And here to talk more about this is Kenneth Hoffman, head of commodity strategy for Red Cloud Securities. It's good to have you join us. Thanks so much.
Thank you very much for having me.
I just want to get your take, first of all, on what we're seeing today in terms of the prices of nickel, copper, even gold and silver. Like, what's some of the reasons for the dip we're seeing today, do you think?
Well, volatility has been at an all-time high. It makes day traders very happy to see markets like this. But I think the overall trend that you're seeing in markets have been very strange. I've been looking at commodities for 35 years. I never saw anything like this where it's geopolitics and trade and actions by the U.S. government and the Chinese government that are really whipsawing commodities, which, again, it's very, very strange to see this type of movement and pricing not based on traditional supply and demand.
It's so interesting. Why do you think now we're seeing this? Like, what's changed geopolitically compared to years past that's actually causing, prices to go up and down based on what's happening politically?
Well, early last year, President Trump announced that he would go after copper imports, and a lot of people felt as if, well, that's going to cause some sort of problem with getting copper in the United States. And so the COMEX, which is the Chicago Board of Trade, you've seen copper inventories rise. A year ago, they were about 92,000 metric tons. Today, they're almost 510,000 metric tons. So again, globally, you've seen copper inventories rise to almost 800,000 metric tons. So demand has really come from the building of inventories, not really normally what we see, which is good demand. And that's my problem with the copper market right now is demand has been soft and it seems like it's getting more soft. And I think traders are trying to go between the economy doesn't look so hot in China, it doesn't look so hot in North America. You saw Canada, some people take down their economic numbers. In the U.S., there's a 30% chance of recession. I think that number might go up during the year. And so you're looking at that. But juxtaposed to that, you have the U.S. government doing all sorts of national intrigues and trade attacks, et cetera. And that's what's causing all the volatility in the price. People don't know what to really do next.
So, okay, apart from seeing the dip today, given everything you just mentioned, do you foresee, copper, nickel continuing to go on a bit of a run in 2026, like what we saw in 2025 and the first couple of days of 2026?
I'd be a bit concerned. I know pretty much every analyst out there is bullish on copper, but in my years of training, I like to see supply and demand dynamics. And again, the demand last year came from inventory build. It didn't come from real demand. And so, in essence, all of that copper that was produced last year is just sitting in a warehouse someplace, either in London or in Chicago or elsewhere. And that material at any point could come back into the market. We also saw a year where we saw an extraordinarily high amount of high-profile outages at mines, and those tend to go in cycles. And so if I'm looking at the copper market, I would be concerned about, one, if the economy in the U.S. and China continue to slow, that's a problem. Two, if these inventory builds start to subside or worse, reverse, there are some negative headwinds for copper here going forward. So I would be very, very cautious.
Very interesting. Do you have the same kind of concerns about nickel moving forward?
All metals, the other part of the issue you have is how the world is sort of segmenting itself away from each other. And I think the reason for the buying of a lot of these metals is also, what if we wake up one day and, China says we're not going to export nickel, we're not going to export copper, we're not going to all these products that we tend to export, or Indonesia for that matter says we're not going to export nickel, which they have threatened at a number of instances to do. And so that's why you see the high volatility in the marketplace, because there's just an awful lot of uncertainty. And I would think for a lot of the base metals complex, you're going to see a very, very volatile market. I would be a little more concerned on the downside than the upside at this point in time after such a good run. But expect this high volatility these days of 5, 6, 8% moves. I think that's going to be the norm in 2026.
I wonder, you're talking about supply and demand, and we've seen an increase when it comes to China buying up a lot of critical metals, sorry. How do you think that might affect things moving forward if we see that demand coming from China?
Well, I think for the mining companies themselves, that's great. China has been a huge buyer of mines globally. They've been going on a shopping spree, particularly in Africa and in some Asian countries. And I think now that you're starting to see the West say, wait a minute, we can't have China have monopolistic control over all these metals that we need, particularly when the US seems like they're threatening war with this country and that country, and the defense complex needs a lot of metals. That could lead to a lot of consolidation of the miners. I fully expect to see a lot more M&A in this industry. And I think that's really good, particularly for the junior and small miners. I think their day is coming where people are really starting to say these assets are going to be a lot more valuable going forward because of the geopolitics.
Does it seem counterintuitive, though? I mean, a lot of investors are watching for potential tariffs being slapped on some of these metals by the U.S. this summer. Is that counterintuitive for the U.S. to be doing that?
Well, everything the U.S. seems to be doing seems a little bit counterintuitive at times. But it is what it is. And I do think, though, I'm more concerned about China cutting off the world and, countries in Europe who desperately need metals, in North America, et cetera. All these countries are starting to say, wait a minute, we need a long-term plan. Now, remember, from buying a mine or an asset that's in pretty early stages to actually development takes a really long time. So you need a long time set. But again, if you look at these companies and where they're trading, particularly where the price is, they're incredibly undervalued. And I think at the end of the day, some companies are going to figure this out. You have seen some M&A activity in late 2025, but expect for a lot more M&A activity going forward.
Okay, so much to watch for. Kenneth Hoffman, head of commodity strategy for Red Cloud Securities. Appreciate your time. Thanks so much.